Excellencies, distinguished guests, ladies and gentlemen, it is a great pleasure to join you at this year's Regional Capital Market Summit, an event that is fast becoming a defining platform for shaping the next chapter of Ethiopia's financial architecture. In recent years, Ethiopia has embarked on bold and far-reaching reforms to stabilize our macroeconomy and lay the foundation for sustained, inclusive, and long-term growth. Within this wider reform journey, capital markets have emerged as one of the most critical instruments for mobilizing long-term financing. For government, they create new pathways to attract investment, strengthen fiscal sustainability, and channel capital towards our most important national priorities. Capital markets are not merely financial platforms, they are becoming a central pillar in financing Ethiopia's future. Financing that future requires a fiscal system that is modern, disciplined, diversified, and aligned with the reality of growing and transforming economy. Over the past few years, we have taken deliberate steps to reinforce fiscal discipline, expand domestic revenue mobilization, improve public expenditure efficiency, modernize debt management, and advance the reform of state-owned enterprises. These reforms are already yielding results. We have strengthened transparency in public finances, reduced reliance on central bank financing, broadened the tax base, and enhanced the credibility of our budget process. Yet, we also recognize the challenges that remain. Revenue pressures persist, driven by structural constraints and global volatility. Expenditure needs continue to rise as we rebuild communities, expand essential services, and invest in critical infrastructure. While debt vulnerabilities have eased, they still require careful management to ensure sustainability and alignment with our medium-term strategy. At the same time, global financial conditions have tightened, underscoring the importance of strengthening domestic resource mobilization and broadening access to market-based financing. It is precisely at this moment that capital markets assume heightened importance. As traditional financing channels become more constrained, capital markets provide a powerful mechanisms to mobilize patient, long-term, and diversified finance. They allow government to raise funds in transparent and market-driven manner, reducing dependence on monetary financing and reinforcing our commitment to macroeconomic stability. By enabling the issuance and trading of government securities on an open platform, capital market foster price discovery, expand the investor base, and strengthen the credibility of our fiscal operations. They also complement our strategy to unlock the private sector's full potential as the primary driver of economic transformation. As firms gain access to equity, corporate bonds, and innovative financial instruments, they stimulate investment, generate jobs, and broaden the tax base. A virtuous cycle emerges. Vibrant capital market fuel private investment, and private investment reinforces fiscal sustainability. This synergy is fundamental to financing Ethiopia's development ambitions. Capital market development also offers a meaningful pathway to enhancing long-term debt sustainability, improving public-private partnerships, and advancing sustainable development. By expanding local currency debt instruments, we gradually reduce reliance on external borrowing and shift toward the domestic source of finance. This diversification lowers rollover risks, lengthens maturities, and reduces interest rate vulnerabilities. Deep and liquid markets mobilize long-term domestic saving from pension funds, insurance companies, collective investment schemes, and retail investors, reducing concentration risk and strengthening the resilience of our financing structure. Transparent, market-based pricing further strengthens fiscal discipline. When government securities are traded openly, the yield curve becomes a real-time measure of investor confidence. It guides policy choices, encourages prudent borrowing, and reinforces the need for sustained macroeconomic reform. Market pricing also limits the temptation to rely on off-budget or on concessional financing, since any deviation from sound policy is immediately reflected in borrowing costs. In this way, capital markets serve as an external accountability mechanism, driving better policy, enhancing credibility, and supporting responsible public financial management. The government is likewise turning to market-based mechanisms to improve service delivery and enhance the efficiency of state-owned enterprises and public-private partnerships. Once SOEs and PPP project companies access capital markets, whether through bond issuance or partial listings, they adopt higher standard of transparency, independent audits, continuous reporting, and investor scrutiny. This market-driven accountability strengthens governance, reduces information asymmetry, and creates strong incentives for better operational performance and long-term value creation. Infrastructure remains another critical priority where capital markets can play a transformative role. Ethiopia's ambitions in logistics, energy, housing, digital infrastructure, transport, and agriculture cannot be achieved through public financing alone. The financing gap is large, but our opportunities are even larger. Capital markets allow us to turn infrastructure into an investable asset class through green bonds, municipal bonds, revenue bonds, and infrastructure investment funds, mobilizing both domestic and foreign capital for long-term development. With retail-friendly investment products, citizens can also participate directly in the nation's development, reinforcing national ownership and ensuring that infrastructure expansion remains inclusive. A well-regulated capital market further strengthens Ethiopia's integration into the global financial system. It provides foreign investors with clarity, consistency, and confidence. Through government securities, corporate bonds, equities, and infrastructure instruments, international capital gains structured access to productive sectors of our economy. This brings new financing, enhance market liquidity, stabilize the exchange rate, and contribute to a healthier balance of payment position. Financing Ethiopia's future, however, will require more than ambition. It requires coordinated, deliberate, and forward-looking action. At the heart of this effort is a diversified mix of financing instruments, ensuring that both public and private investment needs are met efficiently and sustainably. Equally essential is a strong coordination among our institutions, each playing a distinct role in building a transparent, resilient, and credible financial ecosystem. When these institutions work in harmony, we create a market environment that attracts investment, supports stability, and delivers results. Above all, fiscal transparency and accountability must remain non-negotiable. Investors, whether domestic or foreign, respond not only to returns but to confidence. Confidence that public resources are managed prudently, that the rule of law is upheld, and that the economic environment remains stable and predictable. Our task is to build a fiscal and a financial ecosystem that channels capital to its best use, fuels innovation, and empowers our citizens to participate in the nation's prosperity. By doing so, we are not simply financing infrastructure, enterprises, or public services. We are financing Ethiopia's future, a future that is stable, dynamic, inclusive, and sustainable. The foundations have been firmly laid. The direction is clear, and the opportunities before us are immense. If we continue to work together with the discipline, vision, and collaboration, Ethiopia's financing future will be one of resilience, confidence, and shared prosperity. I wish you all a productive and inspiring summit. I thank you.